Let's cut through the noise. While everyone's fixated on big tech and AI, the real action is happening where no one's looking. The smart money, hedge funds, big banks, aren't chasing hype. They're quietly moving into overlooked sectors. It's classic misdirection. They're accumulating 3 sleeper stocks, not the ones making headlines. The signs are there. Unusual volume, options activity, subtle analyst upgrades. Billions are being bet on these companies breaking out. In this video, I'll reveal these stocks, the entry points institutions are targeting, and how you can position yourself before the crowd catches on. Plus, I'll warn you about a dangerous trap that could cost you big if you stick with the herd. Let's get started. First up, let's talk about Vulcan Materials, ticker symbol VMC. This company might not be a household name for most retail investors, but it's a giant in its field and a quiet powerhouse in the market. Vulcan isn't flashy, and that's exactly what makes it so interesting. In a world obsessed with the next big tech breakthrough, Vulcan's business is all about the basics, supplying the raw materials that literally build the foundation of our cities and infrastructure. Vulcan is the largest producer of construction aggregates in the United States. Think crushed stone, sand, and gravel, the essential ingredients for highways, bridges, airports, and skyscrapers. Every major infrastructure project in America relies on what Vulcan provides. Without these materials, nothing gets built. For over a century, Vulcan has been at the heart of America's growth story, quietly fueling the expansion of cities and the modernization of transportation networks. Their reach is national, with quarries and distribution centers strategically located to serve booming regions. While retail investors chase the latest tech IPOs or meme stocks, institutional investors are quietly accumulating shares of VMC. They're betting on a decade-long infrastructure boom, powered by massive government spending and a renewed focus on rebuilding America's roads, bridges, and public works. Recent government infrastructure bills have unlocked billions in funding, and Vulcan stands to benefit directly. As these projects ramp up, demand for aggregates is set to surge, creating a powerful tailwind for the company's revenues and earnings. Technically, the stock has been consolidating for months, forming a textbook ascending triangle pattern on the chart. Each time the price tests the 255 resistance level, buyers step in with even more conviction, and trading volume spikes higher. These are classic signs that institutions are building positions, preparing for a potential breakout. If you look at the options market, you'll see a surge in call option activity and unusually large block trades. Clear evidence that big money is positioning for a significant move. These aren't retail traders. These are funds and professional investors making calculated bets. So, what's the play here? The smart move is to wait for a confirmed breakout, specifically 2 consecutive daily closes above $255, accompanied by strong volume. That's your green light, signaling that the institutions have tipped their hand and momentum is shifting. As always, risk management is key. Set your stop just below the breakout level. Around $248 is a good spot. This way, if the breakout fails, your downside is limited and you live to fight another day. The initial price target sits in the $285 to $290 range, based on the height of the triangle pattern and recent price action. But with multi-year tailwinds from infrastructure spending, the real upside could be much greater if the trend continues. This isn't about chasing the latest hype or getting caught up in market noise. It's about recognizing a fundamental shift that most of the market is ignoring, and positioning yourself early to benefit from it. Vulcan is a textbook case study. Clear technical signals, strong underlying fundamentals, and unmistakable institutional footprints all over the tape. It's the kind of setup that doesn't come around often. So, add VMC to your watch list, set your price alert at $255, and let the market confirm the move. There's no need to rush, let the setup come to you. Don't get distracted by the endless headlines or short-term volatility. Patience and discipline here could pay off in a big way, especially as the rest of the market catches on. The institutions are betting on America's next great rebuilding cycle. The question is, will you be positioned before the crowd, or will you be chasing after the move once it's already underway? Recognize the setup, wait for confirmation, and ride the wave alongside the smart money. Sometimes, the most powerful opportunities are hiding in plain sight, right beneath our feet. Next up, we have Baxter International, ticker symbol BAX. a name that's been a staple in the healthcare industry for decades, but lately, it's been flying under the radar for most investors. Baxter is a healthcare giant, a company whose products and services touch millions of lives every day. From IV solutions to advanced medical devices. But despite its critical role in hospitals and clinics worldwide, the company has faced a series of tough challenges in recent years. Supply chain disruptions, rising inflation, and a high-profile product recall have all taken their toll. These issues have not only impacted Baxter's bottom line, but also shaken investor confidence, leading many to question the company's future. The result? Baxter's stock price tumbled dramatically, plunging from highs near $80 all the way down to the low 30s. Wall Street, always quick to move on, seemed to write the company off as a lost cause. But here's where things get interesting. Behind the scenes, a turnaround is quietly taking shape. Management isn't just sitting back, they're actively working to right the ship and restore Baxter's reputation as a leader in healthcare. With a new CEO at the helm, Baxter is aggressively cutting costs, streamlining its operations, and making bold moves to unlock value. One of the most significant steps is the planned spin-off of its renal care business, a classic strategy to sharpen focus and boost shareholder returns. While the broader market seems to be ignoring Baxter, institutional investors are quietly accumulating shares. They see the upcoming spin-off as a major catalyst that could unlock significant value and drive a re-rating of the stock. Technically, the chart is showing promising signs. There's a solid base forming between $30 and $38, and we're seeing volume spikes on dips, classic signals that big money is buying the lows, preparing for a move higher. Adding to the intrigue, activist funds are now building positions. These are the investors who don't just wait for change, they push for it, often accelerating the turnaround process and unlocking hidden value for shareholders. The technical breakout signal to watch for is a strong weekly close above $38, ideally on high volume. That's the moment when the market's perception shifts from broken to recovery in progress. When that breakout happens, the narrative changes. Suddenly, what was once seen as a struggling company becomes a recovery story, and momentum investors start to take notice. For those looking to play the turnaround, the strategy is clear. Enter on confirmation of the breakout, set a stop just below $36.50 to manage risk, and target $45 as the first leg up. This approach gives you a favorable risk-reward profile, and don't forget the spin-off. By holding through the transaction, you'll receive shares in both the legacy Baxter and the new renal care company, a bonus that many investors are overlooking, but one that could add meaningful value to your portfolio. Right now, the market is largely ignoring Baxter, distracted by flashier names and recent pain. But the smart money isn't missing this opportunity. They're quietly positioning themselves for the next chapter. This is a textbook, deep value play. A beaten-down stock with a clear catalyst, heavy institutional interest, and a management team committed to change. These are the ingredients that often precede outsized gains. So, add Bax to your watch list, set your price alert for $38, and be ready to act when the breakout comes. Preparation is key. Don't let this one slip by unnoticed. Remember, the easy money is made before the headlines catch up. By the time the story hits the front page, the biggest gains are often already in the rearview mirror. Don't let the pain of the past blind you to the opportunities of the future. Baxter International is quietly setting the stage for a comeback. Will you be ready when the market finally wakes up? Last up, let's talk about Coterra Energy, ticker symbol CTRA. This is a name that doesn't always make the headlines, but it's quietly positioned at the crossroads of some of the most powerful trends shaping the energy sector today. Coterra is an energy play hiding in plain sight, often overlooked while investors chase flashier tech names. But sometimes, the best opportunities are the ones right under our noses. Over the past year, Coterra's stock has been punished for its heavy exposure to natural gas. With gas prices under pressure and negative headlines dominating the news, many investors have written off the sector entirely. But here's what the smart money sees: a coming demand surge that could catch the market off guard. Institutions are quietly positioning themselves for what's next. The rise of AI data centers, the onshoring of American manufacturing, and a renewed focus on domestic energy security are all set to drive natural gas demand much higher in the coming years. Add to that the global boom in LNG exports. America is shipping more natural gas overseas than ever before, and Coterra is right in the middle of this transformation. Meanwhile, Coterra's oil operations keep the cash flowing, providing a steady stream of revenue even when gas prices are volatile. This dual exposure gives the company a unique resilience, and when you look at the numbers, the company's balance sheet is rock solid. Low debt, strong cash reserves, and disciplined management. That's the kind of foundation you want in a cyclical sector. The stock itself has been stuck in a tight range between $26 and $29 for over a year. This is classic accumulation. Big players quietly building positions while retail investors look elsewhere. Insiders are buying, which is always a bullish sign. And while you wait for the breakout, Coterra pays a healthy dividend, rewarding patient investors and making it easier to hold through the noise. The technical setup is clear. The breakout trigger is a close above $29 on double the average trading volume. That's your green light to enter. To manage your risk, set a stop at $28. The initial target is $33 to $34. But if the energy bull market really gets going, the upside could be much greater. The real story here isn't just a quick trade, it's the potential for a multi-year bull market in energy, as the world wakes up to the need for reliable domestic power sources. The trap, believing that tech will lead the market forever. Every cycle has its leaders, and the baton is quietly being passed. Institutions are already rotating into value, industrials, healthcare, and especially energy. The smart money is always early. If you're still all in on yesterday's winners, you're exposed to the risk of being late to the next big move. Crowded trades rarely end well. The smart money is diversifying before the rotation is obvious to everyone else. Vulcan, Baxter, and Coterra are all early signals of this shift in market leadership. These companies are quietly outperforming, and their strength is a clue to where the next wave of gains could come from. Don't wait for the headlines or the crowd to catch on. By the time the story is front-page news, the biggest gains will already be gone. Add CTRA to your watch list today and start tracking its price action closely. Set your alert for a breakout above $29 so you're ready to act when the opportunity comes. Watch for the breakout, and be prepared to move with conviction when the signal appears. Remember, the next market leaders are being accumulated quietly, far from the spotlight. Will you catch the wave early, or be left watching from the sidelines? Recognize the rotation, pivot before the crowd, and let the institutions do the heavy lifting while you ride the next big trend in energy. There you have it. 3 sleeper stocks the smart money is quietly buying. This isn't just about stock picks, it's about spotting a major market rotation before it's obvious. Take a hard look at your portfolio. Are you diversified or just following the crowd? The time to pivot is before these breakouts hit the headlines. If you found value here, hit like, subscribe, and let me know in the comments which sleeper stock surprised you most. Thanks for watching. See you in the next one.